Hello, guys. Hello, clown Twitter with Twitter account. You have been waiting for me, right? hello, clown with Twitter account. So, what is your name? Because I don't want to say clown with Twitter account. So, what is your name? Or change your name of the channel. At least I will say your name. Thank you very much. Happy Thanksgiving, Adam. Yeah, Adam. That's a good name. The first human on Earth. You are the first. So happy Thanksgiving. I see that we have zero watching. Although Adam is with us, but I see zero watching. It means he's a ghost. He's not a real person. Now, since we just begin, so we should wait just a little bit. I see that the stream is not doing so well. The live stream is on orange. It means it's not doing well. Oh, you are the fourth? Why you are the fourth? 5 by 5. Oh, yeah, okay. Now here I see that the live stream is orange. It's not green. Most of the time when it's good, it should be green, but I don't know what's... And it showed me that I have been with you guys 3 hours. I don't know why this chat or this live is not looking good. Okay, no problem. So for today, we try as usual. We try to see to see the market. We try to see your questions. We try to see the Thanksgiving deals, and we try to see other things. So bear with me, guys. Just I wake up, so we should wait a little bit for other guys to come and to drink my coffee because I just wake up. So okay. Let's begin. So it's a very busy week as usual in the market. Let's see. So we are 4 watching. I see here that we have 3 hours time elapsed and 3 minutes, which is not true. I don't know what's this chat room. What's this? Now. Yes. I will talk about the market, and as I told you, until now, we are at the end of November. It means 10 months, and we are still in this correction. We will never know what's going to be in December or in next year, if God wills. But as I see it, nothing is changing from it means from February. Nothing has changed. It means the market is guilty. Now the market is neutral. It means the market has done nothing. It gives just the activity of the people. Since the people, they don't know what they are doing, day traders, they find opportunity to sell, they sell. That's it. And other people think that the market is going up when they see some little trend, and they begin to buy up. Okay, so it's the same thing happening from February until now. I don't know what's going on, but It's going up and down like a zigzag thing, trending into a range for a long time ago from February, and you can do nothing. Either you go do day trading, like you can short, you can go up or short each day, or you can do options. Okay, everything is going down, but understand that in the market, 1 week or two going down and 1 week or two going up. It's alternating. Okay, so I don't know where it goes, but the good thing is this thing will be changing. Okay, this thing will be changing. It means it's not going to be the same always. You said you have shorted a stock. Okay, that's good. Let's see. In a few minutes we can go there and we can check those stocks. Yes. So you said, Adam, I went and shorted KSS at the earnings. I lost KSS. So let's go. Maybe January we see all-time high crazy. Well, for me, it doesn't matter. It means the people who are playing now with the market, it stays playing because they are making money. So whenever someone is making money, it doesn't matter. Either you go short or you go long. It doesn't matter at all. Okay. If you are, for example, shorting and 1 week, 2 weeks, 3 weeks, 5 weeks, you are making money. So you will be happy with that. You don't want the market to go up again, except when you are an investor. Hello, wise man. It's a long time I haven't seen you. So you will never know. Maybe we go to a bear market in 2019, okay, and the market collapse. Maybe the market will be going up and we forget about this correction for the whole 2018. And understand that before, in January 2018, I see a strange thing. If you can, Adam and Wiseman, if you can remember, if you go to my channel, 29, I think 27, on Saturday when I do the live, I spoke about the correction and what are the solutions for the correction before the correction. I just felt that in all the news it says, oh, buy stocks. It's a good year, and yes, the people in January begin to buy too much. I see it. And I feel that Wall Street guys are preparing something bad. Because you understand, they control the masses of people. The masses of people are controllable through websites, through the TV, through these big channels. Okay? Either real channels or big websites or big brokers. All they give advice what to do, and sometimes they ask you buy, and each time buy this. Okay, and things they are having a schedule to the market. That's why you see stocks. Listen, this is very general and to understand. If all the people are buying, okay, all the people, it means they ask people. In January, it was very good. Now, why people sell, in your opinion? They will never sell. People, they buy a stock and they see everything is going good and he makes money. Why he should sell, especially when he is an investor. But the problem is that after like few weeks, at the beginning of February, we see the collapse and the correction. From other time, there is nothing big change. They go a little bit up later, and I thought it was the beginning of a bull market. But when after a few days the stock market goes to the correction, I stop saying bull market because I see something change, a reverse. And for me, I don't play with the price. Okay? If it is above the resistance line and all the thing is going good, it's a bull market, yes, at that time. But when it goes back, it will be so bad. So before we do anything, we try just to see the stock of Adam, which is called KSS. We just take a look at it. Oh, I haven't traded the KSS for a long time. I don't like the usually I don't like the retail stores. So just from 9 February, you see that this stock was beat down since 12th of November. Okay, 12th of November. Today is 23. So it was so bad. Now you said to me that you lose money here. Oh yes. It means you have begin to short it at 62.43. Maybe with the open, it goes 62.03. It means you make some sense, and then the stock begin. Oh, let me see what does it do. So from 62.34 it goes to 62.03, and then it goes up so good, like 65. Oh, okay. I understand. So you should you should be careful with that. Hello, Oraparabis. Hello, free trader. Yes, it was a very good Thanksgiving, very good holidays this week, and thank you very much. Oh, you short at the open. I'm telling you something. A technique I have showed you last week when someone asked me about the techniques about earnings. So when it is a gap down, most of the time we have filling the gap. Most of the time. So you should be aware of this next time. Okay? Filling the gap, it means if the stock goes down, it can go up to fill the gap, or if it go up, it can go down. It happens sometimes in bad markets. Um, but just gambling, and just because you see the stock go down, you just um, sell short. This could be very dangerous. But the stock has been going down. You are right. It means if the stock continue to go up, you can make a lot of money. But it didn't happen like that. It happens that it goes down a little bit, 40 cents or 35 cents, and then it can go up again. So you should put stop line. Ah, yes, you have done stop loss and you stopped out. Yes, it's very good. It's very good that you do a stop loss. Okay? It's very good because you will never know what the market is, and it is a very troubled day. Okay? The day for the earnings, it means where the earnings is shown, gap up or gap down, most of the time it is very bad. So try to be careful, because we have large, sometimes we have large, a lot of people, sometimes they gamble. Okay? At the open, they put orders, for example, to short without looking at the price. Okay? They say it's might that the price will go down and they make money. So they always just have orders at the open. And the market try to execute all these orders. These orders, sometimes they are opposite. Some people think that the stock will go up, like the short sellers will try to buy back their shares. So they think that the stock will go up to fill the gap. Some people like you think that the market will go down because a lot of orders come in order to short the stock. Okay? And who is strong, he will win. Okay? Who is strong in the market will win. And the market doesn't give you how many shares traded have been shorted or not. It gives you all the volume, and this is bad, because if you see the numbers of shares traded for real, you will understand the price better. But unfortunately, they don't give this information to anyone. So because when you see the volume, let's say the volume, the first half hour, let's say it is 1 million. So 1 million, you will never know how many shares are bought to go long and how many shares are sold short. You will never know. Okay? And this information is hidden from the market participants. It means all the traders, they don't know. But try always to follow the price. This is the most important thing that you can do. And be careful whenever something you see wrong, and you will see the risk to lose money. Just you exit and then you watch, because sometimes if you are day trader, you should be flexible. Flexible, it means you should not stubborn that the stock will go down and that's it. You see the stock is going up, but you think that the stock is going down. This is a dangerous thing, because you are not looking at the price or at the tape, as they say, and you are looking at what you think, and you think at your hope. If you short, you hope that the stock go down, but if the stock shows you something wrong, going up, it's the opposite. But it's okay. It's okay. You try to practice and practice and practice, because earnings you can fight daily. And if you want to be specialized in day trading in earnings, you will be an expert in the future. Okay, but it takes time. So if it takes time, you should not buy and sell a lot. Okay, don't sell and buy a lot, because if you sell and buy a lot, each time you lose, it will be very bad for your account. So try to minimize and try just to what we call practice, and try to use all the techniques that you know, or get some other techniques, and try just to make sure you practice until you understand how things work. But understand, each earning news is different. You see, for example, what happened to Facebook and Twitter. Facebook lost $44 in one evening, in one afternoon, 3 hours or 2 hours. You see how much. If you were there and you see Facebook going down, if you short it, you could make a lot of money from it. But understand that this it doesn't happen always. Okay. So since we are speaking about the market, so let's go to the three major indexes. We try just to see what's going on. And as you can see, this Kohl's retail store is doing the same as the Dow Jones. The same thing. It's going down for 1 week. Let's go and check it for a moment. So let's go and put the day. Now you see this week here, this week which is going down here. This week, all the market has been going like this for most of the stocks going down. So if you take the Dow Jones, you see that the whole week is going down. And then it is still going down, as you can see, Dow Jones. Okay? And listen, see this? This is the play that I always speak about. It's going up, going down. Okay? Now it reaches nearly here. It reaches nearly the support line here that we have here. Now we try to see next week. If next week is going up, it will be doing the same stuff. But if it continues to go down, it's a new thing. So understand that it is a new thing. Okay? But the game is always the same. So as you can see, Dow Jones have gone so down, and then it goes so up until it reaches the resistance line near, and then we can get out of this. But everything go down again. So here, it was 262. Now it's 242. It means $20 loss in this 2 weeks, nearly 2 weeks. Now, if you see Russell 2000, it's the same game. Okay, all the stocks are doing the same game. You see, going up, going down, the same game. And now we will see where it goes. But the Russell 2000 have lost a lot compared to Dow Jones. See Dow Jones, for example, it lost just little. So if you compare here to here, it's not that much. But for Russell 2000, it was here. See how much, how it was before. It was doing so good. That's why before I told you we are in a bull market, because see, the bull market has started so good. But Wall Street guys decide for the market to be going down instead of continuing to go up. Because Russell 2000 here, it was 160. It goes to 172. So it was going good. So, but those 2 weeks, okay, stocks go down for 1 week, go up for 1 week, or so, 1 week and a half or so, and then goes down for 1 week or so, or 2 weeks. So we are still in the same game. Now the SPY is doing nearly the same as Dow Jones. So S&P 500, the middle cap companies, are doing nearly the same as Dow Jones. See? Are doing the same, nearly the same. Okay? So it's the same game. Going up, going down. We try to see next week. If next week the stock market continue to go down and hit the support line, it means the market will be in distress. Okay? It means it will lose a lot of money and we will go back to our correction. See the correction as before? So we are going near it. Now we are in 263 and the correction 252. It means if it lost $10 more, it goes to the support line. But understand that these are ETFs. Okay, ETFs, they go slow compared to stocks. Okay, we will speak later about the stocks until we see some questions. Penny Kamis said, "Hi Kareem, MLNX. I stopped out at 88. MLNX. Let's so MLNX. Here we have a gap up, it looks like. And here we have small gap down. And it looks like it's going up. Let's see here. Yes. It's doing a bit. But listen. This MLNX, it doesn't work like it is not the same as the market, because this stock is going down for a long time. Okay, and then we have the gap up, and then we have a new trend. Okay, see, and then the trend breaks up, so we will never know if it continues to go up or go down. But understand that Mellanox Technologies Ltd, MLNX, it's going down for a long time. The stock was like 45. It goes down to 65. So it was in a downtrend before, okay? And then there is a reverse with this gap up. There is a reverse, and people begin to buy. 85 is the low. 85 is the low, and you say 88. Okay, yes. Now we see Oral Pronobis on the SPY weekly chart. The 200 average stands out to me. Could it go that low? Now listen, Oral Pronobis, I don't use moving averages, so I don't care what they give me as information. So a lot of people, like investors, they use them, but understand, for me, what they show you is the global thing. When you look with what I look, you will understand the whole picture. This moving average, even if it says to you it's going down or going up, it doesn't matter. because this moving average is looking at the closes of 200 days. 200 days, it's a lot. For me, I don't look at this 200 days. I look from the correction. So my information will be more precise than this moving average. So I don't use it. So if you are using it, okay, if you are using it, it's okay. If you change, for example, this is the funny thing. Go, for example, or on purpose, go, for example, and change the days. This line will change, and this is too bad. Because it depends on when you begin, 200 or 50 days, or 200, or you use 100, or use 50 days, or 16 days. Whatever you use, the line change. So it is not that precise indicator. It's what you put. And this is not reliable. I can't rely on something that when I change the day, it changes everything. But for me, let's say when I use the correction as the basis, everything will be okay. Okay? So everything will be so precise. When I'm using trending into a range for now, I just show you how the stuff goes up and goes down. Now with your simple moving average like 200 days, it is not really effective. And all the indicators, I'm telling you, I don't use any indicators. Those indicators are lagging information. It means they give you old information you can't use. Okay, that's why I don't use that so far. Penny came and said, do you think it's okay to enter again in 90, which stop 95? Listen, the thing is, here is the problem. The market is doing so bad, going up, going down. But if you want to enter, this time you shouldn't give too much room. It means if you buy, for example, 100 shares from let's say 90 to 95, you are going to lose $500. You can't do that, but you try to be very, very careful. Let's say next week the whole market is going down again. It's still going down. Maybe they go to your stock and they short it, although it is a good stock, and because we are not in normal setting, we are not trading normally from February to now. There are a lot of buying and selling at the same time that affect the market. Okay, it means when you see, for example, calls, we just saw the chart. It does the same as the market. The market is going down for 1 week or two, so most of the stocks are going down for 1 week or two. There is an exception of certain stocks in the market. They are very, very, very few, not too much. Most of the time you find penny stocks that are moving up good, sometimes. Why? Because they are manipulated. It means they are very easily manipulated up or down. So if they go up, you can find a bargain. Okay, and some stocks, a lot of people are buying, so you find little or few short sellers in those stocks. Most of the stocks that are not known, that not day traders are not interested in, so you find these kind of stocks resist going down. Okay, it means they resist. Why? Because a lot of people, they don't want to sell. Even short sellers come, they are long investors, they don't sell. So you find the stock strong. It means it doesn't go down so quick as the other stocks. And if the market is going up again good, these stocks will continue to go up very normally. Thank you, Oran Pronobis. So Penny Camus, you say you enter at 90 and you do 85. It's okay, but try to see next week. See first what is the mood of the market. If the market continue to go up on Monday or Tuesday, it's okay. You can buy, and always put stop loss. And it is a trade. Okay, it is a trade as the other trades. But what I always suggest in these days or in these months from February to now is do not put too much money in the market, because the direction is not known, especially when you are going long. When you are doing swing trading, try to be careful not to put too much money, because if you put too much money and the market is playing like this, you will be losing a lot of money because there is no trend. And this is the secret. This is the secret I'm telling you about swing trading, is you should find the trends. If there is no trend, there is no money. And this idea of trend, I always explain, and I always make sure you understand. If you want to do day trading, or it will be maybe better than putting all your money into swing trading. So Adam said, what if the market react like for the next 5 days? It will be hard to make money. Why Wall Street don't want neither bull nor bear? Yes, but some people, they don't care. If you buy on Monday and the stock market goes to Friday, 5 days going up, you can sell and you can make money. So it doesn't mean that you should stay 4 months or 5 months into a trend. So you should just get these small trends and play them. As you can see, these trends are very clear, as I just showed you. It goes up, it goes down, it goes up, it goes down. You see them, and you see how do they play, but you should make sure that the beginning is right. Okay? Oh no! Why do you say years? No, not years. No, not say days or years. No, I'm speaking about the trend. The trend. There is a trend. All 2017 and half of 2016 was excellent. I just showed you. Oh, you mean in the future? You mean in the future? Now, the future, listen, the future, don't worry about it. Don't worry about the future because you don't know, so don't worry about it. So worry just about what it is now. Don't think about the future because you will never know. You said no trend has developed right now. No trend. There is no trend. There is one trend I showed you before in the Dow Jones. It stays like 3 months. I will show it to you, this trend before. And if you go back to the live session that we have done before, and those times, you will find that I have spoken about this trend before. So let's go to this trend. Just to show you. Now, this is the trend that I showed you before. Listen, here. This trend, for example, begin from 28 June. it finishes on October. So we have June, July, August, September. So June is done. It means we begin with July. So July, August, September, 3 months. All this is 3 months here. Just to make sure you understand. See, this from here to here. Okay? All this is an excellent trend. It's a 3 month trend. July, August, and September. Because in October 4th, we have the collapse here, as you can see. And it is too hard, you see? It's too hard. It means the downtrend is so quick. It's so quick. And now we have a reverse. We have a reverse, as you can see. A reverse. And then we have another reverse. So, oh, okay, sorry. You see? So you see the trends? So this is a long one. It's 3 months. Now this one is from, let's say, 30 October to 8. It means it's nearly 1 week and a half. This trend is only 1 week and a half. And then we have another downtrend, 1 week and a half. And for next week, we will never know. So we should wait and see if the market continues to go up to make a reverse or to continue to go down. So we will never know. And don't expect anything. It means you don't know, we don't know. So just we let it for the future. Okay? So always try to so Adam said mutual funds are not buying, so only hedge funds shorting. No, listen. Listen. Right now, all this month is preparation. Preparation, it means Wall Street will decide for the market. It's not, although hedge funds, if they see the market is not having no idea, nothing, so they begin waiting to see some signs if the market is going to be changing. But understand that those mutual funds, the money they can put in more of a lot of things. They can put in bonds, treasury bonds. They can buy a lot, at least a lot of some of their money will not be lost if the market is doing so bad. Okay, so they should do that. They should diversify their assets. I will just before we go to Adam, when he say a manager blew out 150 million. Yes, you can, because options, they most of the people, they don't know how big game is with options. A lot of people, they don't know about it. That's why some people, well, when you put one contract with $50, you say it's only $50 or $20 or $30. But what about when you buy 50 or 100 contracts, like bull, like a call or put options? What if the market changes? You will lose all what you put, 100%. Okay? So you can if you have some stocks, you can buy you can sell calls and puts. So I will show you this before we go to answer the other questions. Let's see here. So first, I will try to speak about mutual funds. So let's say this is their money. Let's say they put here, all this is their money. Here they put, for example, this is here. This is our stocks. Now, if they see that things are going bad, what they do, they take another part like this here, all this part, and they buy bonds, different kind of bonds. Okay? So, if the stocks collapse, it means they don't, let's say they lose 10% of stocks. And in the bonds, let's say they have 5%. So it's like this bonds is like hedging. It's like hedging. It means they are not going to lose a lot of money since they make 5% in 10%. It means their loss is only 5% of for the year or for whatever. And they use, for example, puts. If the market is going down, they can make money. They can use calls. They can use a lot of things in their assets. All this is called assets. They can even buy emerging markets, that are good outside. Emerging markets that are outside, and they are. Let's say there is a bull market. Just an example, okay? In a country or overseas, they can go and buy stocks. They can buy stocks, or they buy ETFs that do ETFs that are doing those bull markets. Okay, in overseas. You see that? So a mutual fund is try all this is called diversification. It is just to diversification is not to put your eggs. Diversification, it means not to put your eggs in one thing. So if you put it in the stocks and understand they will wait 1 year or two, it means it's not a day trade. They don't do day trading or swing trading. They buy for at least 1 year, so understand that. Okay? So you should understand this thing. Now we finish with this. So Adam said, did you know about the manager who blew out 150 million selling bake options? What is this bake options? Oh, naked options? It could be. No, losses. Sometimes when you do more dangerous things, understand that some people, it's not just what we call stocks or bonds or puts, options. They can buy even contracts in futures. Okay? For 6 months or 1 year or two, depending on the contract. Either they can make a lot of money or they can lose a lot of money, but still, because they have a big amount of money, they try to manage, and one of the things will succeed. If they succeed in one thing or two, they can make either break even or make a profit when the market is too bad. Okay? So Wiseman said, long-term investing you have to worry more about future, but with swing trading you have to stop loss, war about the future, just watch the price. Yes, this is a true Wiseman about swing trading, but here is the deal about swing trading. In order to make money, you should have trends. So I will explain this because I have explained many times, and you should understand the goal of this. So I will do it more time. Okay. Now, so here let's say we take 5 year or 5 years investing. Okay, 5 years investing. Let's say this is the stock market. Okay, so here let's say the stock is $50. Now it is, let's say it is $100. Okay, so this is from day one. Here it is 5 years from that date. So this is the period that we are looking for. Now, in swing trading, we are only looking for stuff like this. We are looking for trends. These trends could be a lot. Okay, all these are trends. All these that I mention here are trends. So you are doing a lot of trends. But the market now doesn't give you a lot of trends because now trends are like this. So the time it goes up, it's only 1 week or week and a half. So you should be very, very careful, because if you enter and you lose, you enter and you lose, you don't make a lot of money. This will make swing trading very, very dangerous, because you enter a lot and you lose a lot money always. Okay? Now for investor, if it is like this, most of the time he doesn't make money and he doesn't lose a lot of money. So it's not a big deal. Okay? So for swing traders, you should have long, 1 month, 2 months, 6 months, 7 months. This is how you can make money. Like in this one, in the Dow Jones, like this one in Dow Jones, from 29 June to October, all these 3 months is very good to make money. So there are a lot of stocks that have gone 3 months like this. If you bought a stock and it goes like this, you will be making a lot of money in this 3 months. Okay? But if you go here and here and here, you see that you don't have time. That's why it is so dangerous. Oren Prunubis said, day trading, do you recommend market or limit orders? So it depends on the techniques that you are using. This is to buy. You can use limit order is when you are looking at the price and you wait. When you see the price, you click the button and you buy. Okay? You can use, for example, a stop order to buy. Okay? So on a preliminary basis, I will show you this technique we use in day trading. Okay, I will show you this technique we use in the day trading. So I will just show you technique. So the stock here, $20. It goes, let's say, to 1985. Okay? So let's say you are in a day trading, you are a day trader. Okay? I give you just an example. And then you see that the stock you are watching at the open. This is the open. It's 9:30, okay, a.m. Now 1985, the stock has stopped. Now it is 10 a.m. It means 10 a.m. in the morning, half an hour. It's going down. And then you see a green candlestick. Let's say this is 1990. Now you should see the bid and the ask. Bid and the ask. Let's say 1990 and 1989 cents. So this is the bid and the ask. So if the stock is going up, it means in this candlestick it's going up. So you see it's going up from 5 cents, for example, and you want to take advantage. You can just find, for example, let's say you try to prepare yourself. Okay, prepare yourself. For example, you know how many, let's say you want to buy 100 shares. Okay, 100 shares. And you see it's 1989 and it's 1990. You buy by this. But you should prepare yourself. You should have the window. XYZ is the stock. You put 100. And then let's say it's now 1989 and the ask is 90. So when you want to buy, for example, the ask, put, for example, 1990. Now you add just 1 cent after the thing, and if you want to buy, and you use limit. Now when you click that, if the stock it goes to 91, you buy it. If it stays 1990, you will get 1990. Because a limit order, how it works, it gives you the best price for you. Best price. Now, if you want to enter, you can add 1 cent to the ask right now, and very quick you submit. You submit your order. Don't wait, because if it goes to 91, 92, 93, especially when the stock is going up, a lot of buy. Okay? Now, this is one technique. You add 1 cent and then you submit. You add 1 cent and you submit. And if the stock goes to 91, or even if it doesn't go to 91, you will get 1990. This is the technique. Okay? Now, there is a second technique. A second technique I will show you right now. This is not a limit order. It is a stop order. Now, I will just give you an example. Let's say here, the high of this candlestick, the last candlestick, let's say it is 1993. Okay? It's far away. Now we saw the bid is 1989. The ask is 1990. Okay? But this is 1993. What do? You don't want to buy now until it reaches this line. Now you make sure that the candlestick is strong. So what do? You do stop at 1993. Stop. It means, what does it mean stop? It means if the stock price goes until it reaches 1993, you buy. This is a stop order buy. This is not a market order. Don't buy. Do not buy with market order. No, never. I will explain why market order. I'm speaking here about stop order. Okay? Stop order, it should be above the ask. Above. You are just waiting. So here, the stock is going up, going up, going up, going up, going until it touch. When it touch 1993, you buy. So here, and then the second, for example, candlestick, it's like this. Now it goes to 20. So 93, so you have 0.0, it means 7 cents profit. Okay, it's just an example, okay? This is, it could be candlestick, it could be 1 minute, or it could be 2 minutes, 2 minutes, depending on time frame that you choose. It could be anything. So this is called a stop order. It means you buy in the future. If the stock reach that, you buy it. But let's say the stock did not go up here, and then it goes down again. It's now 1980. So since you put stop at 1993, you will not buy. This is the rule, because the price did not reach 1993. This is second. This is the second technique. Now, the third technique you should not use is no market order. I will explain why. What does it mean, market order? Now you ask your broker, I want to buy with any price available. Any price available. So sometimes, now the bid is 1989. This is the bid. Now the ask is 1990. This is the ask. Instead of getting 1990, if you put marker, they can give you, for example, 1998. And you buy with this. Now you ask your broker, why you give me this bad price? The ask was only 1990. Why you give me 1998? It's just because of your market order, because you ask any price available. And they play, the brokers, the market makers play with this. Since you said market, they can give you any bad price. You can't change that, because when you buy, it's a buy, and they can't give you back your money. And they check the shares, because this is something done. There is no reverse. No reverse. It means you can't ask your broker, oh, okay, I don't want this price, give me my money back and take your shares. No, you can't do that. Okay? So it is your fault. It is your mistake. You don't know the orders. Okay? So this is part of the thing. People uh, people, sorry, I have been explaining without the thing. Okay, so I think I have been explaining without showing you the techniques, I guess. So let's see. I don't know if yes. A wise man said, because limit order, you won't exit as quickly as times. Sorry guys, I think I have been explaining without showing you the explanation, and no one tells me that I was explaining without the diagram. So please, did you see the explanation with the first technique and second technique? I can repeat them right now, because I was explaining, and I think I didn't show you the whiteboard. I didn't show you. This is for oral probabilities. Day trading, do you recommend? Oh, now for to exit a trade is something the opposite. Okay, so now for the exit, you should use always stop order. Now, because stop order, let's say you buy at 20, you put 1950. Now, whenever the stock market reach 1950, you sell. From a stop order, stop becomes market. But here you are obliged because to get rid of the stock, because it's continue to go down. If you put, for example, you put a limit order, what will happen? Sometime you get with 1950, sometimes you put limit, it's not filled. And you ask your broker, why I put a stop loss? No, you can't put a limit order, because if you put limit order, if it goes below, let's say you submit, and now it's 1949. Okay? Sometimes this price is not filled because it is not 950. So the best way to exit a trade is to use a stop order, because the stop becomes market and you exit. Did you see when the stock in some bad days, okay, someone last week has showed us a stock like this. It was going up here, it was going up, this green candlestick, it was going up, and then we have a gap down here. Let's say the stock here was $50. Let's say it goes at the open, it opens at $55. This is the open. But from the open, it goes down, let's say, to 50 at the close. So it is $5 more down, and here we have $5 of the gap down. So if you put limit, and it's not the exact number, so your limit order is not filled. And you can't ask the broker why it is not filled, because a limit order some of the orders are not limited, are not filled. But when you put a stop order, you must exit with any price. That's why you push the market to accept your order and you get any price. Because the stop becomes market order. Market order, it means you ask the market you want to exit right now with any price. So the market will fulfill your order and you get out with any price. Let's say 55. Okay? 55. If you put stop order and it goes to 54, you will exit at 54. You will exit at 54 if the market opens at 54 and you put 55. You will exit at 54 because you want to sell with any price. But with limit order, it's not filled. Okay? So this is one of the things that you should always be careful. Okay? So So for many guys, let's say here the questions I forgot. Okay, we have questions, so be careful. I'm always try to see all the questions and begin with the beginning and then I go down until I reach the last thing. So Adam said, what's covered calls? Now, if you own a stock, you invest in a stock for many years. It could be even in ETF. ETF, it means you are buying index. But you want to get some money from your stock by selling calls and puts. Okay? If you succeed, you can make the premium. It means instead of you buy a put or you buy a call, you will be you selling to other people. So it's the opposite side. Do you remember when you want to buy a call or you want to buy a put for a stock? You don't own nothing, okay? You own just a contract. So who will sell you? It's someone else who have the stock and he sells you a put or a call. So if you want to try this thing, try to call your broker. He will explain to you how to call and whatever price you want, how much money do you want to make, because it depends. If you stay 1 week or 2 weeks or 1 month or 6 months, it depends. And people are buying calls and puts. It's always. It's like trading stocks. We have trading options. We have trading currency pairs. We have trading futures. It's the same thing. People are buying, selling, always. There are some winners and a lot of losers, always. So if you are interested and you have a stock that you would never sell, like for 10 years, 15 years, you can sell what we call covered calls. It means you sell an option that you own the stock, because you can sell like naked options. You can sell options without owning a stock, but it is more dangerous. And you can own the stock and buy and sell options, calls and put options. So if you are interested, you should contact your broker and ask him about how to sell a call or a put. He will explain to you, and if you want to do it only once, he can show you and you can try it. Okay, so it needs a lot of explanation, and your broker can do it for free because he will show you the way. And when he show you the way, in the future, if you want to each time you sell a call or a put for when you own the stock, okay, you can do it many times whenever the time of the contract finishes. For example, in these 2 weeks, let's say you sell a call from your stock that you own. Now, these 2 weeks, you can't touch your stock. You can't sell, you can't buy, because it is linked to this call or put options until the guy sold or bought sold his option. If he doesn't sell, it will become worthless, and you get your stock back and you keep the premium. It means the money that he gives you, you keep it as profit. This is called premium. Okay, so, and if you are interested, you can check my training about how to buy and sell calls. You can check my training level 14. Okay, now Wiseman said, because limit order, you won't exit as quickly at times. No, Wiseman, limit order, sometimes you don't get filled. You don't sell at all. And this is a very, very big problem, because if it is a bad day for that stock, they shorted too much. It means a stock of 20, it goes to 15, to 14, to 12. It means it is a very, very hard selling short for that stock. I don't know what's the problem, with any reason, with any news. So what will happen? It means if you don't exit on time, you will be losing all that money that the sellers have done to the stock. So don't play with stop loss. You should put it where you can't afford to lose more. For example, now one of you guys has told me I buy at 90 and stop loss at 85. So he put his stop loss. It means it doesn't matter. If it reaches 85, he will exit, no matter what. He will not stay until it becomes 80 or 75 or 70, and then he sell. So when you put your stop loss correctly, you should exit at that price that you decide. Okay. Hello Duna, how are you? Penny Camus, to exit a trade with a stop, usually it's a stop market. Yes, it means when you use a stop order, you exit the trade right away with whatever price. This is what we mean. Okay. Hi, Trump. How are you? Penny came and said, sorry, my English. No, no, you are good. You are good. I understood what you say. And I try to answer as I can. So, as I told you before, this week and a half, the market go into a downtrend. 1 week and 2 weeks or 3 weeks before, it was going up for 1 week and two, and you understand that we are always in this game of trading into a range, going up, going down, going up, going down. There is nothing that shows that there is a trend. Now, when I speak, Duna asked me the question, are we in bear market or correction? No, we are still in correction. Now, I will explain again. As usual, I always explain. Each week I explain this again. Just try to take notes. And when you take notes, this question will be answered forever. So please, take notes or watch my video again on this time. So let's go to the chart. Okay. I will just make it easy for you. Duna and all the other guys who are watching. I always do the same explanation. Okay. Here is the last good day, Friday, 26 January. It's so funny that in 27 I have done the video about the correction and solutions 1 day after, before the crash. Now this is where the correction, it should be from here until the low in the support line here. So all these days is called the range of the correction. It's from the blue line to the red line. At least I use colors in order to see. Now, what did happen to the market? It becomes to go up and down, go up and down, go up and down, until now. You see that 3 weeks ago the stock was going up, as you can see. It's a trend, but it is small. And then the trend reverse and go down. So all this between the blue and the red is called the correction. If it goes here, so I might take this and okay, and I will put it I'll put it here in order just to go to show you. Okay, so as you can see, this is the chart. I just try to make sure you can visualize this. Now, here is the bull market. If the market goes above the resistance line, this is the bull market. Now, the bear market is when it go down here from the support line. This is the bear market. Begins here. It can begin next month, or it can go up and do the bull market. Now, all this here between the blue and the red, all this is called correction because it's the same thing. The stock market is going up, going down, and we are still in the same range. Okay? So you can please, you can take a screenshot of the computer. You can take screenshot and you keep it and you make it for yourself. This is the bull, this is the correction, this is the bear. So we are waiting for the market to make a decision. The market has not making a decision yet. It's make a decision, it means it will cross the blue line and everything will go up. Most of the stocks will do good, except for those who are bad companies, and they will go down. Now, if this crosses, it means that most of the stocks will go down and everything will collapse. Okay, so it's the days for day trading. And for position trading, it means you sell short for long and you leave. Okay, so that's the big deal. Hello, Rikoshi Necessity or City. How are you? It's a long time I haven't seen you. More workers said, when a stock is dropping price, who is buying the shares on the way down? Other than short covering, why would you buy knowing it's going lower? This is a good question. Now, when something is going down, you will never know it continue to go down or it go up. So there are millions of traders, when they begin to trade, they think that the stock stops going down, it's going up. They buy. And then after a few minutes, they realize that the stock is still going down. So they begin to lose. They sell. So this is the game. So understand that I will give you an example just to make sure you understand. Okay? I will make a, for example, you see the stock is going down. Let's say this is days. Day 1, day 2, day 3, and then someone sees in the morning the stock is going up. So he buys here. He buys here. He sees that the stock is going down. Yes, it is going down. But who tells you that the stock will not continue to go up like this? Who tells you? Or it can stop again and go down again. So all these are probabilities of trade. These are probabilities. Okay? Probabilities. Probabilities of the trade. So people who buys here, they can make money if the stock goes up again, or they can lose money. And this is trading, so you will never know, because this is a future. These 3 candlesticks, 1, 2, 3, 1, 2, 3. This is going up. This is going down. This is the future. You will never know. Now, if you tell me, okay, don't buy. So, we have no trading at all, and you see the volume is 0 for the stocks. If the people, they don't buy, they don't sell. And this is not normal in the stock market. Okay? Yes, as Trump has said, the entire market is pump and dump. Yes, it is. It is a pump and dump. I told you, I had made a video like many days ago. I say how Wall Street manipulate the market. It's manipulation, what you can do. Because there is no trend. there is only pump and dump. It means why stocks are going up for 1 week or two and then it goes down for 1 week or two. This is just a game. This is just a game. You should either play the game or stop trading. If you are a day trader, you should have the mindset right now to change your opinion according to the price. Okay? That's why day traders, they take quick decisions. Now, for you, if you are an investor, you should not be like a day trader. You should not buy today and because tomorrow the stock goes 1%, you sell it. This is stupid. Because you bought the company. You are an investor for 10 years. This year is bad, maybe next year is good. So you see the opinions, you have different opinions. So investors and traders, they have different opinions of time. An investor, he bets on the long run for a company. He said, this company, I like it. It makes a lot of money, a lot of research, and I think that this company will become bigger and bigger and bigger and bigger. That's why I will stay 10 years, 20 years. Like Warren Buffett said, if you want to invest, think about the 20 years. And he is right. It means a company doesn't grow in 1 month. Okay? It doesn't grow in 6 months. It grows in years. Then you begin to see the good or the bad stuff. If the company is good in competition, it makes a lot of money, you will see that because mutual fund will discover this in years. They will discover this company and they buy it. That's why it will go up in the future. But if mutual funds finds that this company is not making money that much and the research is too bad and there is a lot of competition, they will not get interested to buy more of this company, even if they have bought before in the past. So try to understand, you should have the mindset either of an investor or swing trader or a day trader. You should have this to continue into the market. And don't ask why. Why you buy a stock? Okay, anyone has his own reasons. If you go, for example, to 1 minute chart, you find people buying, people selling. I will show you an example of the chart. Let's say we take we take Facebook. See? We take today, Friday. Now we take, for example, 1 minute. See 1 minute? Do you see that here we have a trend? Here we have a downtrend. So people, they play this game. Here you go up, you go long. Here you go short. Here you go long. Here you go short. This is how the people play. Okay? Now you see here, for example, it's a downtrend in a few minutes. You see? This thing, in order to be doing like this, you should practice a lot. And if you take the day, the whole day, see? Now let's say someone here, the first minute, 9:31. The stock go up, go down. 5 minutes to go up from, let's say, 133.74 to 134.41. And then let's say you see the stock is going down from here and you begin to short until the end of the day. So you see that it is going down. If you put a line like this where you bought with green, just an example, okay? You bought here, let's say you bought it here, or let's say you sell short here at any price here, and you see that that you are making money. Are you going to exit? No, you are staying until the end. So from, let's say, from 134 it goes to 131, so you make $200 in here. So you see why the people are buying and selling. This, each green candlestick, it is more buying than selling. All this 1, 2, 3, 4, 5 minutes, 5 minutes is going down. All this 5 minutes. 3 minutes, reverse. 3 minutes going down. Okay? So who is selling and buying? There are people who are doing that. So the stock doesn't go up and go down by itself. You should have buyers and sellers. Okay? So this is what I want to show you. And please, for you guys, always don't ask why people buy or sell short. Don't ask. It's not your business. It's not your business. Like you, when you go now, you buy a stock. Who will ask you why you buy? You have your own reasons. Okay? So there are millions of traders in the market. There is not only one guy who is in the market. There are millions, and all the people are buying and selling short. So it is your opinion. What you see, it is your opinion. But when you see the chart, when it is done, you see the past. Oh, you say, why you don't short this? It's going down. But when you are there, you don't sell short. You have different opinion. Maybe you think it's going up, so you don't sell short. So understand, there are millions of reasons, so don't ask why some people or a person buy. But if he is an investor, you should ask him why you buy this company. For example, Warren Buffett has bought Apple. But right now, Apple is doing bad. But Warren Buffett, he doesn't care about this year or next year. Apple, it's a big company, it's a great company, it can come back again when the market is good. Because it is making money, because it is very famous, because it has the best cell phone or the smartphone in the world, because all the people like it. That's it. So this is why he is buying Apple, because he see a lot of stuff that it is good as a company. But he doesn't think about 1 minute chart or 1 day chart. He's not a day trader. He is not going to throw $5 billion in a stock today and after 5 minutes he will sell them. Because he has a lot of money, he can't do that. It's too much. And he is not a hedge fund. It means he is not interested to sell short. Okay? He is going always long, according to what he knows. Okay? So this is just to make sure you understand that buying and selling is your own perception. It is your own perception. What you see in the price, I go sell short. You see, you go long, and we are looking at the same chart. How is that? Okay, it's just a matter of opinion, and everyone is doing. The good thing in the stock market is in our lives where we live, when you do something, people ask you why you do it, your family or your friends or whatever. But in stock market, you go, no one knows what you are doing, and you just play with stocks, with options, with futures, forex, cryptocurrencies. You play with this, you play with that. You make money or you lose money. It doesn't matter. It's your own business. You do your own business. No one will ask you the question. So understand that everything depends on what we see. Okay? And you see, for example, someone, he is in the army and there is a war elsewhere, and he goes to the war. You ask him himself, why do you go to the war? It's his own business. Okay? So this is the way he chooses. Like you don't want to go, he wants to go. All depends on your opinion about subjects. Okay? So, as you can see, we have seen the market that this 1 week and a half is doing bad. And this week and the end of last week, it was very bad in the market. But understand that it is not all the stocks that are bad. Okay? So I don't know if we can go to we can go right now to just to make sure you understand. We go to the Dow Jones, Hope, and we can just see the see the Dow Jones. I don't know where it is, the Dow Jones. Let's see. Yes. So, I will show you Dow Jones stocks. What are they doing? We changed to the daily. Okay. Now you see. Okay. You see that Boeing is doing so bad in these 2 weeks. You see that. Okay. It's doing too bad. Now this United Healthcare Group is not that much bad as Boeing. You see the difference? So these two stocks are not doing the same. is not doing bad. It's doing so bad, this Goldman Sachs. This broker, it was 275. It's 189. It means it has lost around 33% of its money. This broker. You can see how bad it is. See how bad it is? And it's going, see here, it's going into a downtrend. Very, very long downtrend. Now you see McDonald's, for example. Is McDonald's the same? It's doing good, McDonald's. Even though 4 days going down, but it is doing good. So you see that McDonald's, like from August, September, October, November, is doing good. It's a long trend. Okay? So you see the difference? What I am saying always, that not all the stocks are doing the same. Apple is doing too bad. I have sold Apple a long time ago. When I see that it doesn't do good, I was here for a long time, but when the downtrend has become clear, I exit. Home Depot also going down. Now, Johnson & Johnson, you see, it's doing good. It's better than the market, see? It's going good in this 3 or 4 months. So, you see, trend. You see the trend? From, let's say here, from June, is doing better than the market, see? Visa is doing bad. Bad, not good. Bad, As you can see, IBM is not doing that good. It was 153, now 117. Chevron, Disney, troubled. JP Morgan Chase, American Express is doing better than the market. Microsoft is better than the market because it has been going up. And see the long, it's like from April until now. April here, the stock was 91. It goes to 115 and then it collapsed. Walmart 95, it was 109. Okay. Procter & Gamble is doing so good. It's doing so good. You see, the stock was 71, now it is 91, which is doing very good. Doing good also, which is this Walgreen Boots Alliance. You see the trend. The gap down here, we have the gap down, but from the gap down, the stock has been doing so good. From 59, now it's 80. So if you take, for example, this stock, can you compare this stock with, it's from July. So from July, August, September, October, beginning of November, it's doing excellent. This Walgreen Boots Alliance, it's not doing the same as the market. Exxon is doing that bad, not good. And you can see that the gas in America is going down, so it's good for us. I don't know. Okay, so you see this Merck and Co, how good it is doing. It was 54, now it's 74, $20 more. Nike is not doing that much. Verizon, Dow DuPont, not good. Coca-Cola is doing better. Intel is doing bad. Cisco is the average. And PFE is the wing, is trend. It has a very long trend, and now this trend broke. So this is just to show you, okay, it's just to show you these things about the stocks. Understand that stocks, every stock is doing the same, but the majority is doing the same as the market. And few stocks, they escape the market. But if you tell me how it comes that these stocks are doing good, it's just because people there, they don't sell. And mutual funds, they are not selling. Maybe they are buying for those stocks. That's why they go up, and short sellers, they can't do that much. When there is a big guy behind the stock, a mutual fund, and he is buying, the stock will be forced to go up. Okay? So they can't kill it. But if there is mutual funds who are selling, this is the big problem in stocks. It means the stock will be going down. Okay, so I think it's 1 hour 49, and it's it's the end. It's the end of this session. So please, if you have any other questions, and I will in my golden subscription, I will try give you stocks, to show you stocks that are doing better than the market. We should follow other stocks, and the weekly search. It means a lot of lessons in options and so on, because we should find ways to see the market in order to make money. And we should never put all your money into the market, except when you are doing a very, very long trend. But understand, as I told you, you should always take my picture, take my chart, and think about bull, correction, and bear. Think about it. If the market is collapsing, believe it or not, if you don't short the whole market, if you don't sell short, if you don't buy options, put options, believe it or not, you will lose a lot of money, and you will never know how much you will lose. Okay? So thank you, Penis Camus. Thank you, Trump and Wiseman. Try to check the from the website. You can check the. I know most of you guys, you have my website and my email. If you have any questions, please just ask questions. This is the best thing to do. Okay, and this is my email. If you have any question in this weekend or so, whenever you have a question, you just ask me email. And for the golden subscription, each one who do subscription for 3 months, the 4th month I give a training for free. It means you will get any training from training level 2 to training level 20, and you choose any training and give it for free. It's just because, you know, I need to have all this like subscribers to give them most of the information, fresh lessons, and we are following the market and hope we have a good thing about the market. If it is a bull market, if it is not, we should change everything to shorting, to selling short, to give you lessons in selling short, day trading, and puts and the other stuff, because you should follow what the market will do. Okay, especially if you are a day trader, you should know how to buy long and sell short. Okay, so thank you very much for staying, all of you guys who are watching. Okay, thank you very much, and see you next time.